We have Angus Geddes, CEO of Fat Profits, joining us from Sydney this morning. Angus, what volatile markets, what do you think of commodities right now?
Look, there's a lot of volatility, there's a lot of panic in the marketplace at the moment, but nothing's really changed to our secular long-term view that commodities are in a bull market. So we certainly see some bargains out there at the moment, particularly in the resource equity space.
Okay, do you want to name names?
Well, I think there's tremendous value in some of the large diversified resource companies, BHP, Rio Tinto, both companies now trading on lower forward PE multiples than what they were in 2009 during the previous sell-off. We also see excellent value in the energy sector, particularly the large caps, Woodside, Oil Search, current prices, and also in the gold sector, where we've got a large proportion of our fund invested.
Now, what makes you think we're in a secular bull market? Do you think demand is still there, considering we're seeing slowing growth around the world, maybe at stall speed and double dip in the U.S.?
Look, I think what we're seeing is really a transfer of economic power from the west to the east, from the developed world to the developing world. And I think that China is going to continue to grow, India is going to continue to grow, and other countries in Asia, over the longer term, they've got the resources to do that. But short term, you're going to see these periodic sell-offs, these corrections, and we're maintaining our position, and we're taking advantage of the cheaper prices and doing some selective buying.
Okay, so from the names that you've selected that are great buys right now, Angus, it seems like you're preferring to gear more towards the miners, basically the metals producers, rather than the oil producers. Is that right?
No, we very much like the energy sector. So with the sell-off and the oil price down to $80, I think the value is really coming through, particularly in those large energy majors. But we're seeing value across the board, really. Iron ore, we've been buying Atlas. In gold, we like Newcrest, and I think it's quite interesting what's going on in the precious metal space, where precious metal prices are elevated, yet the precious metal stocks haven't followed. So a bit of a valuation gap opening up there.
Okay, well, given the supply and demand, I guess, of fundamentals, do you think there's more of a support line for commodities right now, such as energy, such as copper, such as metals, than, say, for equities?
Look, I think both asset classes have been sold off aggressively, and what we're looking for really is it's going to take a few weeks for things to settle down, but for some form of recovery rally to take place, in the not too distant future, triggered by a policy response from the central banks, the Federal Reserve, which we sort of anticipate happening later this week.
Okay, Angus, thank you for sharing your time and your thoughts this morning. Angus Geddes of Fat Profits joining us on the program. All right, coming up next.